Big shout out to Prime XBT for sponsoring today's video. If you don't know who Prime are a platform where you can not only trade crypto, but you can also trade FX, commodities, and stock indices. And the beauty of these guys is you can use crypto, either Bitcoin or USDT, as collateral to trade against these pairs. If you want to find out more about them, then check out the links down in the description. And if you do want to trade with them, then use our codes below to get up to a 7,000 USDT deposit bonus and 25% off trading fees. So thanks once again for sponsoring today's video. Good morning, gang. Good morning. Welcome to this week's altcoin update. First and foremost, remember, everything discussed today is not financial advice. I'm not a financial advisor. This is just my view of the markets, and it's for educational purposes only. Now that's out of the way, it's been a green few days. Obviously, everyone's getting a little bit euphoric. You can definitely tell the sentiment has changed after Bitcoin has had quite a decent pump to the upside, and lo and behold, it's dragged everything else up with it. So things are looking quite green. Do I think the lows are in? We'll see. I can argue both cases. But for me, most things are still range bound, and that's how I continue to trade because that's the kind of trader I am, level to level. So let's dive into the charts. Let's first do a brief recap on last week. So last week we were looking at Gala and LDO. And let's pull up a quick screenshot. Let's see if we can get the right one. Here we go. We can look at this now. So obviously last week we were looking at two options. We're either going to reject at the higher time frame range low or get a reclaim in. And if we do get a reclaim in, then my first target would be the point of control, followed by the second target, which would be the value area high, which is up here. So go back into the chart, throw on the TA, zoom in, and as we can see here, this is the point of control in question. We managed to continue bumping up against this. As I was saying, the more times a level gets hit, the more likely it is going to break. And lo and behold, we had the first initial tap, came back down, blasted straight through it without a reaction, came back for a back test, and then obviously we're hovering around this point of control now. So is this the time to FOMO long? No, not for me, because we're resistance. Do I think it could go higher? Yeah, it could go higher. Obviously, if it does go higher, then as I said last week, I'd be looking back up here, back at the range EQ, the value area high, the local value area high, and then don't forget just above that, we've also one thing to be aware of. Trading View jumped out of its skin then. One thing to be aware of is obviously the macro point of control. Now, obviously, this is since inception, so it's a very key level to be aware of up here. So, current thoughts, if we can flip, Trading View was jumping all over today. If we can flip this point of control into support and continue up, then we're looking basically to take out these highs into the EQ, into the value area high. If you manage to get above that, then you'd be looking at this macro point of control, flip that, and then you'd be looking up at these local range highs here. Okay. What would it look like if it was a pullback? Well, if it is a pullback, first and foremost, you wouldn't want to lose this cluster. If we pull this on a little bit more, we'll be able to see that now. And we can see from the volume profile, we can see the cluster of volume here. So ideally, you won't want to lose that. So if it does end up breaking down, let's just clear a few of these things, shall we? If it does break down from here, let's say we get another pump up, swing failure pattern, take out the highs, come back down, then first and foremost, you're looking at this range to hold. If this range fails to hold, then you'd be looking back down at this value area high. Acceptance back into this value area, and as we can see here, the volume is quite thin underneath it. And like what we were saying last week, when you get a move like this is a thin move. And we can see that from the volume profile itself, it's a thin move. So if we do get accepted back into value, then we're just basically back to trading this old range, with the point of control being the key support level now. Okay? So it's really simple, it's level to level. One thing, it's been discussed quite a bit, and obviously I can see it happening. I can see it happening, especially in our free group as well as Twitter and YouTube and everything. And obviously everyone's trying to get really uber bullish right now, and yeah, you know, as I said at the beginning of the video, the macro lows could be in. But one thing that people seem to forget is, let's just hide some of this. This is where people go wrong. Let's look at this chart. Obviously, we've got the highs up here, which the highs are at 80, call it 87 cents, and the macro lows are 1 cent, just below a cent. Sorry, just over a cent. Okay, right. So this is where people go wrong. So people see this first initial bullish pump from the lows, and it could be, again, like I said, it could be the macro lows. But people see this, and this is where FOMO kicks in now. You see this pumping candle, small retracements, and it just continues up. And people just think now, this is where the inexperienced comes in. People think that this is just going to continue going up in a straight line. Up in a straight line until we get to all-time highs. That's how people see this. Especially if you came into the market back here, and obviously that's what you did see. But bear in mind, this was obviously one of the greatest bull runs crypto's ever seen. Right? Now, for those of you who haven't experienced a bear market before and getting out of a bear market, then this is going to be news to you, because don't forget, this wasn't part of the bear market when this was created. This was created in a bull market. So you've got a small accumulation phase followed by a huge significant pump. Now, if this is going to be the bear market lows, you've got time. You've got time. You don't have to just go all in here and hope for this. You've got time. You can wait for an established uptrend. Now, right now, this is looking at on the daily chart. We do have an established uptrend, but bear in mind, we are getting rather extended. Let's look at the weekly. The weekly. We're creating our first high. We've taken out these highs. So could we say that this is a change of market structure? Well, we're starting to see it, but what we now need to see is we now need to see either a continuation of a pump, and then we want to see is a pullback, and we want to see a higher low being formed. Now that higher low then is significant, because if it does form a higher low and then continue the uptrend and then take out the most recent high, then you've got an established uptrend on a weekly time frame. So, okay, that might mean that in the grand scheme of things, you miss out on the first 240% pump. But then again, are you missing out on that because did you catch the low? If you bought in here, then you're going to be taking a drawdown potentially before having another leg to the upside. So time and patience is your friend here, and this is what I explain to my guys. It's you've got to be patient at these things. It's not seeing a pumping candle and just running and jumping straight into it, because that's called FOMO. And if you can't control your FOMO, then you're really not going to make it, because as much as back in this bull run, you pretty much got away with all your bad habits and just longing. This is the potentially, if it is the start of a new trend, then these bad habits can still go against you. Because what a lot of people are going to do now is they're going to see these and they're going to long and they're going to say, right, here we go, we're in. So let's long. Candle's pumping. Let's long. Let's put my stop loss here. It's going to go to the moon now. It's going to go straight up. And then lo and behold, what happens is this whole first leg gets a correction. So it comes down. It takes out these lows. Stops you out. Because that's ultimately where you're likely going to put your stops, if you're going to use stops at all, unless you're a complete degenerate. So then what happens? So it comes down here. So you go, okay, well, I'm going to move it down here. Right, I'm entering here. It's taking these stops. Great, cool. Right, moon time. Great. And then that's just the first part of the collection. So you get your bump. And then it comes back down again. And it might take out these lows. I'm not saying this is exactly what's going to happen, but I'm just saying this is an example. So all of a sudden it comes back down. And then you stopped out again. And all of a sudden you're like, wow, because I've got no risk management in place and I don't know how to trade, I'm just going to long again. My money's running really thin now. So now my position is a quarter of the size as it was up here, but it still could run. And you just keep doing it and keep doing it and keep doing it. And this is what happens. This is the common mistake that I see time and time again in the bull market. It's just impatience. You just can't wait for a sensible pullback. Okay? So don't get greedy. Don't start getting FOMO. Control your emotions. At the moment, we're still range bound. We are still range bound. Like we just said. You know, nothing has changed. We've had one pump. Bear in mind, in this whole bear market here, we did have a pump here. You know, from the low to the high, we had 150% pump. And yet it still continued to roll over. Now, am I saying it's going to continue to roll over here? I'm not necessarily saying that. It could do. It might not. Nobody can tell you that. Because nobody has a crystal ball that can tell you that. Anyone that tells you that, and they're speaking in facts, then unfollow them instantly, because chances are they're going to get you wrecked in the long run. Okay? For now, we're still range bound. Start getting out of this range, then, yeah, maybe looking at game on. And fair enough, you might miss a few percent, but, you know, it's the grand scheme of things. What you want to do is you want the confirmation, you want the safer entry, you want the smarter entry. You want to do what smart traders are doing. Okay? Not giving into FOMO. Okay? If you guys really struggle to control your FOMO, then it's worth coming to check out our website, because on our website, you get access to our free Discord, and there's loads, hints, tips, charts, everything shared in here. In fact, lately on altcoins, the guys have been going crazy, and I love to see this. Obviously, the altcoin. This is in the free group, by the way. This isn't in the premium group. You know, the charts are unreal. You know, the guys have been absolutely smashing some of the altcoins. It's been fantastic to see. Okay, but then if you do want to control your FOMO and understand trading psychology, then check out our Copilot's course. Now, obviously, this course we've got we've nearly got 100 hours of educational content, but you get access to it all for 60 quid. You know, not 100, 200, 300, 400, 500, it's 60 quid. And 60 quid, that gives you access into our private Discord, where I share my own plans, but it also gives you access to all the educational content. And the module in question that we'll really find useful is the trading psychology. We've got 2 modules on trading psychology, and this is the sort of stuff that just keeps you calm. Keeps you calm. You know, you've got to really control your emotions if you want to make it as a trader. Even if you just want to be an investor or a hodler, you really need to understand this. Okay? So, that's an option for you. The other thing, as a quick announcement while I'm here, is if you're not subscribed to us on YouTube, then go subscribe to us and check out our new playlist, our trading tips. So on Sunday we released our second episode, which covers technical analysis or fundamental analysis, and I'll give you my thoughts on which one's best. And the results might confuse you a little bit, or might make you angry, because I know a lot of people like one over the other, but worth knowing, because in my opinion, I think you need one more than the other. But if you are going to use the other one, then you still need to understand the latter. But watch the video and it'll make sense. Right, next. LDO was the other one we talked about. Have I still got a screenshot of this one? Here we go. Yeah, LDO. So obviously we were talking about the time we had the initial pump into the 786, which obviously came to this high volume node here. And then we said if it is going to get another drive up, we need to be aware of the golden pocket, because that is considered strong resistance for now. Now when we go into it, we can see we had that initial drive up into the 786, pull back, and we've had another drive up into the golden pocket again, which lines up with his channel EQ and the value area high, and now it's holding us. So effectively we are at resistance now. So this is not a time where I'd be longing. I'd be making sure that I've taken profits. If I didn't manage to take profits on that first initial pump up, then, you know, I'd be locking in some profits if I have long from lower. Okay? And then what you're waiting for now is you're waiting to see what happens. What sort of resolution do we get? So, do we flip this EQ outside of this value range and continue up? If we do, then you'll be targeting these highs initially. Nope. You'll be targeting these highs initially. Break that. Then, yeah, you know, looking at targeting these highs. If you get no pullback, then likely towards the outside of the channel. Break this channel to the upside, then you've got extremely bullish structure. Okay? To the downside, if this does pull back, then again, we've got a thin move here and we've got plenty of stops. Now, we do have a high volume node coming in right here. So this, for me, would be the first key region, like we said last week. Hold that, you'd be looking for another drive up. Now, does that mean another drive up to new all-time highs, or does it mean another drive up into this region here? Well, the latter. Lose that, then ultimately I'll be looking back down at the point of control, because again, this is very thin down here. Okay? So that's LDO. You know, we are at resistance. There's quite a few coins at resistance right now, including Bitcoin. So, you know, it's time to be cautious. Next, AVAX. This is something that has been requested this week. And again, another coin, significant pump. What we're looking at from the lows. I'm going to do that. From the lows, we've had a 73% pump, so a good pump. Good pump. If you caught that long, fantastic, well played. Right, let's have a see. Let's have a see where we're at then. So, macro volume profile. So straight away we can see here, let's zoom into the weekly so it's a little bit more obvious. We can see here that we are in this high volume node here. Okay, that's the resistance that we've come into. High volume node. Now above that, we do have volume tapering off a little bit. We have a significant bit of volume here, and then the next bit of volume is at high, so we can see there. It's pretty obvious. So what happens? Let's hide that. Let's zoom in, and let's have a look more locally, shall we? So we can see here, similar to Bitcoin, similar to a lot of coins. What we've done is we've breached back into the old range. In fact, I'm going to do it this way instead. I'm going to use our range fib tool that we use in the group. If you want to know what this is, again, this is in the private group. And this is a tool that we use quite often because it's great for spotting deviations outside of a range. And there we go. And what we'll also do is throw it on a local volume profile for the whole thing. And lo and behold, we're at the point of control. Okay, so what can we see here? Well, obviously we had this beautiful range. Beautiful range. We've got the lows of the range, we've got the highs of the range, the lows of the range before initially breaking back out of it, back testing it perfectly before having to push away. And then obviously we've also got respect at the EQ. Loads of respect at the EQ. So what would I be looking for here? Well, would I be longing here? No. Why would you be longing into resistance? Also, why would you be longing after a significant pump in the first place? You know, big pump, fairly overextended. I'm not saying it can't go higher because it can. But what I'm saying is, after an extended move like this, if you're longing up here, then you've just got FOMO. You're chasing candles. Don't chase candles, right? So, what do we look at here? If we continue up and we don't get a pullback, flip this point of control into support, then ultimately you'll be looking back up at your EQ and your value area high, which would in turn take out these highs. Good stop run. Okay? From there, if you get a decent reaction, then taking profits, or taking more profits, shall we say, because if you haven't taken profits so far, then you're a fool. Taking more profits and potentially looking to hedge. Okay? Get a decent reaction here, change your market structure, and then you've got a short trigger. If you've got a short trigger, then again, you'd be looking back down, this point of control, lose that, range lows. Okay? If you get no reaction there, and it just continues up, then ultimately, I'll be targeting up towards range highs. Okay? Now what happens if you get a pullback? Well, if you get a pullback, if it does reject here, then you'd be looking back down at range lows. Now this for me would be a bit of a zone because we've got that value area low below it. So this would be a region as opposed to a set level. Obviously everything, you've got to treat things in trading like regions because obviously not everything reacts perfectly to set levels, especially when you're looking at altcoins as well, because obviously liquidity is thin. You do tend to get spikes and big wicks. So, you know, one thing I'll always say when trading altcoins is, you know, don't try to have your stop losses too tight because chances are you get stopped out, which then means you have to re-enter again and then maybe re-enter again and then re-enter again. And all it basically just does is by the time if you do eventually hit your take profit, then you've walked away break even because the fact that you've taken, you know, 3R losses in a row. Okay? If that didn't hold, then looking back down again at the overall low again. Now we can see here, obviously using this range fib tool, we can see that the deviation happened perfectly to this outside, this first deviation of the tool. You know, lose these lows, then ultimately I'll be looking down at the outside deviation. Okay, so that's it. It's just level to level. Again, I'm not getting overly bullish. I'm not getting overly bearish. You know, we're just range bound. Get out of this range, then yeah, get out of this range, take out these highs, and don't have a significant pullback, then yeah, we can be looking for higher. For now, level to level. Okay? Lock in profits, pay yourself. You can't lose money if you're locking in profits. Okay? Right, ETH. Now, this is just a continuation because obviously we've looked at ETH a fair few times. So zoom right out. There we go, yeah. So, ETH, what can we say? Well, let's button this back up. Let's drag this on further because obviously last time we looked at this was just before Christmas. So back in mid-December, would have been, where are we? Roughly around here, hovering at this point of control. And again, like Bitcoin, like everything else, we've had a decent pump to the upside. So what's happened is we've had a pump, we've come up, we've stalled around the EQ, which is to be expected. And then we've had no real significant reaction. We did have an initial pullback, but then we've continued up. And now we've broken outside of the value, right? But we can see with this volume profile that even outside of this value, we've got this big volume cluster here. Okay? So it's not out of the woods yet. You know, this isn't, like I said on everything, it's not game on, moon time. Here's a few things we can be looking at here. So, first and foremost, if we do clear, if we do stay out of this value range and hold this as support now, which so far we are doing, then I'll be targeting these highs initially. Clear those highs without a significant pullback, looking for your overall range highs. Acceptance back into value, then you trade in value again. And we can see here from the volume profile it's very thin around this part, which is obviously, well, it's clear as day because of the pump up. It's very thin. So you'll be looking back down at this EQ, and ultimately if that EQ didn't hold, then you'll be looking back down around 1327 roughly. Okay? Because that's where the bulk of the volume comes back in again, and effectively it's this old mini range within a range. Okay, bit of rangeception going on. Okay, another thing to note on ETH would be this channel. Now, the guys in the group understand what this channel is because it's part of one of our Elliott wave counts that we've got going on. So one thing to note, so obviously we've got this channel EQ just above us. Okay, if no reaction there, and if it does manage to break out of this range, keep an eye on this channel, because to me right now it's quite important on the Elliott wave count. Okay, so that's it, it's just level to level, nothing crazy. Again, I'm not uber bull, I'm not uber bear, you know, we're range bound. This could go on for quite some time. This might not, this might pump, it might dump, we don't know, but we'll trade the highest probability setups, which means the key levels that we're aware of on the charts. Okay, right, that'll do. If you don't follow us on Twitter, then make sure to use the link down in the description and go follow us, because obviously we do post a lot of charts on our Twitter along with a lot of shit posting. And obviously if you have enjoyed the video and you want to see an altcoin next week, then don't forget to hit that like button, make sure you're subscribed, and comment down below what altcoin you want seen next week. Alright gang, that'll do. As you were. Bye bye.